Now, just a couple of minutes ago, Goldman's chief, Lloyd Blankfein, said he would not raise rates right now. He says the data doesn't support a rate rise. That's from a very important guy on Wall Street, Goldman Sachs chief Lloyd Blankfein. Come on in, market watcher Lee Munson. All right, Lee, we're going to see you a bit later in the show, but I've got two straightforward questions for you right now. Question one, what happens tomorrow afternoon on the stock market if interest rates go up?
I think that we rally because then it's the Fed saying, we hear you, we're going to make the ceremony quarter point rate hike. I don't think it's going to make a hill of beans. People are going to be relieved, so expect a rally if the rate hike happens.
Okay, and the other side of the coin, what happens on Wall Street tomorrow afternoon if rates stay unchanged?
I think that you're going to see the exact same reaction. I think that no matter what happens, hey, listen, I hate to say it, but you know it. You know it, Stuart. Yeah. You know that no matter what happens, people are going to be so relieved. Now, the real thing is not whether the hike happens or not. It's about their comments of why they justified whatever it is. Yeah. But I think that this has been the most watched thing we've seen for almost 9 years. We want to get it over. I think everybody's going to be relieved. Probably Friday, we're just going to have a rally because we can get on to earnings season, which apparently everybody's very excited about for some reason.
Okay, well, we're off and running. That's pretty good. That's a good response. Yeah. The market's going up. Whether they raise rates or keep them flat, market goes up. So said Lee Munson at 9:07 Eastern Time on Wednesday morning. You're on tape, son. And you'll be back on the show shortly. Okay, see you later. The aforementioned Ashley Webster and Sandra Smith are both here. Lee Munson is also here, and Dan Stessich joins us from Chicago. All right, we're waiting for the Fed. Lee, why, apart from the Federal Reserve, why do you say that the market is at a top here? Tell me.
Well, I think that versus just saying the market is at the top, we've got earnings growth that are starting to decelerate. So I think that the viewers at home need to understand is that we only have a little bit more upside that the market has between now and the end of the year. But then the reality is that we're going to hit a recession probably in the next year or so, just because it's a part of the natural business cycle. So I think that what you have to do, if you want to be a little bit bearish or want to be defensive, just wait for a pop, wait for it to come there, take a little profits off the table. Don't go off and make any moves over the next few days, and don't presume just because we might have a Santa Claus rally that means you need to jump in. Okay. If I saw a Santa Claus rally after we get all this nonsense with the Fed, I'd sell into it.
Okay, we hear you. Nicely expressed right there. All right, we're at a top. Watch out. Got it. Goldman Sachs says if the Fed were to raise rates, Goldman Sachs says buy Apple and Chipotle. Sandra, you got to explain this to me.
Yeah, no, so everybody's predicting that the Fed rate hike at the end of the day is going to lead to a sell-off in Apple has notably sold off recently. It's taken a huge hit, but ultimately this would lead to a long-term rally. If Apple's a long-term buy, you buy now. But Goldman Sachs is, and by the way, Goldman sort of falls in the camp that we should raise interest rates, by the way.
Why Chipotle, though? Why, if the Fed raises rates, why buy Chipotle?
Because it has a healthy cash balance and doesn't have to rely on loans and funding, which you will have to pay more for if the Fed raise rates.
Oh, that's the answer?
That's one of the main ones.
That's what Goldman Sachs is saying.
They provided several reasons.
Yeah. Where are we in the price of oil this morning? Again, in advance of the Fed meeting. We're up. Yeah, I think we are. Up a buck, 45.66. Dan Stessich, come on in, please. What will happen to the price of oil and other commodities if the Federal Reserve moves rates up tomorrow afternoon?
You know, in the short term, they might hit a little bit because I think the market's going to get slammed really hard, as Sandra said before. But ultimately, if the Fed does raise rates, they believe the economy's doing well. If the economy's doing well, then you should see better demand. So in the short run, hit a little bit. Long run, I think you get a little bit long. But oil's not going anywhere far to the upside, probably not to the downside
Okay,
either.
real fast, Dan, on stocks, just for a second. Earlier today, Lee Munson, who's also with us this morning, he said, look, if the Fed raises rates, stocks may actually go up. If the Fed leaves rates unchanged, stocks will actually go up. Where do you stand on this, Dan Stessich? If the Fed raises rates, what happens to stocks?
Initially, they get hit. I'm going to buy the stocks because I think it's good for the economy going forward, as long as the Fed has done their homework and saw what the economy's actually doing.
That's interesting. Nobody sees a big, huge downside reaction if we raise rates.
No, there could certainly be a knee-jerk reaction to the downside. But, I mean, guys like Dan Stessich are saying long-term, if this is going to be good for the economy, why not buy on the sell-off even if there is a knee-jerk reaction to the downside?
So we should all relax, right?
Yeah, take a deep breath.
Take a big deep breath. Right.